is Lobo Tiggre, CEO of Louis James LLC. Thanks so much for joining me today.
Happy to be back again.
It is good to be back. We're here at PDAC. It's actually been a year since we spoke here before, and you were striking out then on a new business venture. How has it gone the last year?
Yeah, that's correct. This was my coming out party. I announced to the world for the first time that I was leaving my good dear friends at KC Research and becoming the independent speculator, it's been an astounding ride. And we'll see as the first year comes to a close how the numbers turn out. But it's been a lot of fun. The money's been good. But the important thing is the feedback. The readers love the work, and I can correspond with them again now and communicate with them. And I'm just having a ball.
That's great. Speaking about the last year, 2018 in particular, can we go over your best and worst investments?
Okay, so my best investment was a particular stock would be SilverCrest Metals. I do have on my page at the bottom there's a link to a track record, so you can see all my closed positions. And what I'm doing is obviously my current positions are for the paid subscribers, but people can see everything I do, good, bad, ugly, is published on that track record. SilverCrest is one of those, and it just popped. It was a company I'd known from before, and it was what I see as an example of success in process. Like instead of waiting for the inevitable to become imminent, that famous Rick Rule, inevitable and imminent thing. Forget imminent. I want happening now was my premise. And SilverCrest was happening now. And you look at that stock chart, terrific success last year. Less than successful on closed trades. I haven't lost money yet. I've been able to I've exited 2 more, just barely got my money back out and felt happy to get my money back out. So I guess that's not bad. If I win big on 1, get my money back on 2, I think I'm doing okay.
Yeah, and of course that transparency is good to see. Now, looking ahead to 2019, what metals, commodities are you looking at?
Sure. Well, some people are going to hate this answer, but I have to say, I do think uranium's time has come. And I know that I've said this before, but I would say that I was right last year. If we talked about uranium last year, I don't remember specifically what we said, but I said it looks like we're carving out a bottom. If we see, I didn't jump in right away, but I said if we see higher highs, higher lows, that'll be a signal to me that it's time to get in. And we did see that, and I did get in, and I was right. Uranium was one of the best producing metals of 2018. I was more, kind of so-so about gold and silver. They might be, So I think uranium is happening now. I think there's a particularly great opportunity for investors in that the stocks have been hammered with the broader equities. You could see this last quarter when Wall Street was melting down, the Dow getting 1,000-point hits in a day. The uranium stocks would go down with everything else, even if uranium was up that time, right? So a divergence between price and value, and that's an opportunity for investors. And the other one I will say is actually I'm much more bullish on the precious metals this year. Last year I was kind of like it could go up, it could go down, I don't want to say anything, but I think both the greed and the fear stories look very good for gold this year. And we've already seen, despite last week's, reversal, a great 6 months. It seems to be showing some strength. We might have this be the year gold finally breaks out of its range bound that it's been in for 6 years.
Okay, so yellow metals, which you've talked about before.
Metals.
Good.
Sorry, I got to jump in and say though, if you're a gold bug, you have to love silver. Right?
Okay, silver.
Gold usually happens first. Like people don't believe it until gold's breaking out, but then silver tends to come zooming back and rise more than gold in these things. I think there's a very strong silver story, and particularly because it's also an industrial metal. It goes in these solar panels and all this other stuff too. So.
Okay, I'm going to take you back just for a second to uranium. What are the catalysts we should look at this year? One interesting thing, I saw your talk just now. You were mentioning, there is capacity that can come online, but it takes a while.
Yes.
So can you talk a little bit?
So even if Kazatomprom and Cameco or some of these others said, oh, well, price is higher now, we're going to go back into production, it's not going to happen right away. I mean, I'm not an expert in Kazakh mines, but I can't believe that their level of care and maintenance is superior to Cameco's in Canada, right? And I've talked to people who worked at McArthur River, and they tell me at least a year to get that thing going again. It's not simply flipping a switch. So if you have a world-class mine on first-class care and maintenance, and it takes a year to get going again, I think you'll see a considerable time between prices reaching that incentive level and actual production coming back online. So that's very bullish. In terms of what to look for, The incentive price for new projects, they say $60 is Rick's number. I've seen new Blue Sky Uranium, don't own the stock, just came out with a PEA. They use $50 uranium as an incentive price there. If we get to that level, I think all ships will rise, all the uranium stories will do great. But I think the producers, the ones who have mothballed but in good shape, or have existing production that they're just dialed down because of low prices, I think they'll get the love first. And you start seeing, the uranium hit the $30 level. I think you'll get a lot of attention. $40 level, that starts making more sense for existing producers. So that's probably the first real threshold. $40 uranium, I think, makes a difference for this market.
Okay, let's go to gold. Back to gold now. You're feeling good about gold, the metal, but what about all of these huge deals that are going on in the gold space right now? I don't think we've spoken since we've seen them happening.
Right, yes. So it depends on what kind of investor you are. If you're an investor, a cautious investor who wants leverage on gold, and you like the biggest companies because they're theoretically more stable, this must be very confusing. And if all the big boys gobbling each other up, it'd be like Mordor in the end, one to rule them all in the dark land, one giant gold company gobbles everything else up. I'm not sure that would be a good thing for investors. Where does that company grow from there, right? And I wouldn't be very excited about these things, frankly, if I was an investor in one of these big companies that's there. But it's not all bad news, because around these companies, there's a periphery of affected parties, and particularly juniors that have JVs with these companies, or mid-tiers that might buy some of the assets that don't matter to the world's biggest, uber biggest gold producer, but would be highly material to a mid-tier, could double their production. What does that do to their EBITDA? What does that do to their PE and therefore their P? Highly material events could come out of this, but you have to know what you're doing a little bit, separate the wheat from the chaff. Not everybody's going to be winners. Some people will get, juniors will get a project handed back to them with millions of dollars of value-adding research, which is now theirs 100%, and it's off to the races for them. Other people, money was spent, the results were so-so, the big boys hand it back, and what do they do now? Where do they get money to produce, to go forward from there? So it's not something that would be wins for everybody in the periphery, but I think that there will be spectacular wins as these mergers happen and as assets are divested. Terrific opportunities for the right players around them.
Do you have any ideas on where those divestments might happen, or is it really just too soon to tell right now?
Well, we kind of need to see whether the Barrick-Newmont thing is going to happen, and whether that will cancel the Newmont Gold Corp thing, right? So obviously, if the bigger deal happens, the consolidation in Nevada is very key. But that tells you that everything outside of that space is, if not up for grabs, it's on consideration for the chopping block.
Okay, this is probably a good time to ask you about what should investors be doing right now in gold? Like, what should their strategy be as these activities are going on? How should they be thinking?
Right. Well, I will say, I am saying, I'm actually quite cautious. My newsletter is called The Independent Speculator. I am a speculator, but I'm a rational speculator. I do everything I possibly can to put the odds in my favor. I'm not a wild gambler, and I hate losing money. And it just dawned on me talking to the crowd at my talk. I have no other business now. This is it for me. I put my reputation out there, and it's very important to me to deliver to my readers. What I'm saying is, in terms of what they should be thinking, is I think you should be defensive, actually. I do think that 2019 is looking very good for precious metals, and we could see that range broken finally, but it may not happen. I can't promise that. Nobody can. So I'm looking for what I think of as not necessarily win-win, but win-win bigger opportunities, where if the market goes nowhere, this is a solid, maybe defensive position in the gold space, like the pre-production sweet spot, which we've spoken of before. That works even in bear markets, that strategy. Or like SilverCrest, success in progress, that works and on almost any circumstance. So, even if market goes sideways for a while, those kinds of strategies will do well for you. And if we break out and it goes way up, those companies will do even better. And if they're doing great in the sideways market, they'll do spectacularly well in the booming market.
Okay, there's so much focus on mergers and acquisitions right now. Are there any trends that you think investors may be missing for the coming year?
I'm not sure about trends, but I would say that the unloved redheaded stepchild right now has to be the early stage exploration story. And I understand. I mean, it's hard to get excited about the process. What matters is the discovery, and you never know when that's going to happen. But if you want to buy low, and you want to get in really cheap on something that has spectacular potential, pay some attention to that overlooked area, particularly the prospect generators that use other people's money to offset the risk. They can last years if they have to, and hopefully we don't, right? And hopefully they make a big discovery. But if they have revenue coming in from partners who are spending most of the big bucks, and they have a bunch of projects going on, that is the get rich on process play, which is boring when markets are down, but therefore contrarian and cheap.
Okay, I think as we finish up here, I'd like to hear your best piece of advice for investors this year.
Best piece of advice. I'm going to have to say, it all goes back to psychology. And I know that sometimes people groan when I say these sort of things. They just want the stock pick. But I absolutely think the place to start is to look at yourself in the mirror and know thyself, as they say, right? And we just talked about different things, like am I the kind of person who's going to buy a big company that's more stable, or am I going to take a chance on a junior or even a prospect generator, swing for the bleachers? If you don't have the intestinal fortitude to deal with the prospect generator doing nothing for years, that doesn't disqualify the prospect generator. It doesn't mean it's not going to succeed. It just hasn't yet. Right? So if you can't take that, don't go there, right? Or if you're going to buy a pre-production sweet spot play and metals go down before they get there and there's fluctuations, that happens. If you can't take that, don't go there. Right? So I honestly think it starts right here, between the two ears. And it sounds a little bit, pop psychology, absolutely essential.
Right, and it is also good advice for a place like PDAC where there are so many people telling you their advice on the companies. Okay, well, we'll leave it there for now. Thank you so much for coming. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Lobo Tiggre.